Sajid Chinoy, thank you so much for joining us. You know, the finance minister, of course, famously said now that it's not the rupee falling, but the dollar strengthening, and that all countries are being impacted. What did you think about that statement? Many would say she's technically correct.
Well, Nidhi, it is, because we need to look at the global context here. The genesis of all these pressures that we're seeing around the world is that inflation in the US is very elevated, and the US Fed is on course to taking interest rates there to 5%. The last time we saw these levels was 2006, 2007, much beyond what anybody expected 6 months ago or a year ago. What that does is when US interest rates go up, it sucks capital from all countries in the world, advanced economies and emerging markets. And therefore, the US dollar is at its highest level since 2002, right? And what this has done is put pressure on all emerging market and advanced economy currencies. The euro is at the lowest level in 20 years, the British pound in many decades, the Chinese yuan in 15 years. So yes, this is a story of broad dollar strength, and India, cannot escape these pressures. And so rupee depreciation is reflecting the fact that all currencies around the world, advanced economies and emerging markets, will remain under pressure as long as capital is flowing back to the US and the dollar is strengthening.
Well, Sajid Chinoy, the government says the rupee is falling because these are, of course, unusual times. There is a war, there are fears of a recession, and that it's essentially international factors that are driving it. Is that the case, or are there domestic factors too?
No, these are largely global factors. And the factors is we're seeing a trifecta like we haven't seen before. You're seeing three things happen globally, which is affecting India and other economies. One is, as I mentioned, coordinated monetary tightening around the world. So advanced economy interest rates are going up. The second is the dollar itself is quite stronger. And the third, which affects India in particular as a commodity importer, is that oil prices and commodity prices, though lower than a few months ago, are still uncomfortably elevated. Typically, Nidhi, we tend to benefit from this because there's a natural hedge. When the dollar is stronger, oil tends to be weaker. When oil is high, the dollar tends to be weaker. And India gets a natural hedge on the current account and the capital account. Now we're in this very uncomfortable situation where high oil prices have caused the current account to widen, and a stronger dollar is putting pressure on the capital account. So I would argue these are largely driven by global forces. In fact, I'm going to make the case. I've been arguing for a weaker rupee for the last 6 months, because in a world in which other currencies are weakening, you don't want to be too strong. The rupee is down 10% year to date. The Chinese yuan is down about 12%, so is the euro, right? The yen is down 22%, the pound is down 16%. Why is that important? Because if other currencies weaken more and the rupee doesn't move, we become strong relative to those countries, and that hurts our exports, that makes imports cheaper, and therefore actually hurts growth and job creation in India. So a weaker rupee in a calibrated manner is not a bad thing. It's the shock absorber to global shocks, and it's necessary to ensure competitiveness vis-a-vis other countries.
Well, the other concern, of course, is that India's forex reserves are falling because the RBI is selling dollars to save the rupee. It's down more than $100 billion, but the rupee is still falling. Are there other steps that can be taken then to save the rupee?
Yes, so I would say that there are three instruments that countries like India and emerging markets have at their disposal to deal with the shock. One, as you pointed out, is we've got this war chest of reserves, and the RBI has primarily been drawing upon that. But because the shock could play out for many months and many quarters, we need to be prudent about how many reserves we draw down and make sure we have enough of a buffer stock to last us over the next couple of years if the shock perpetuates. Which is precisely why, apart from reserves, the rupee has to become a shock absorber, right? So you can't only rely on one instrument. You want three things to be working in tandem. You run some reserves down, you let the rupee become a little bit of the adjustment mechanism, and interest rates, unfortunately, will have to rise because you don't want the interest rate differential vis-a-vis the US to go too narrow. So these are uncomfortable choices to make, but I would argue prudent macro management would mean you rely on all three instruments. Interest rates gradually move up, the rupee gradually depreciates, and you use some reserves, but make sure you have enough of a buffer stock for the next couple of years.
Finally, Sajid Chinoy, what's your prediction? How low could the rupee go by the end of this year?
It's impossible to predict because it depends entirely on what happens in the US. And I would go so far as to say what happens in the US labor market. If US inflation doesn't come down, we've had two really ugly prints in the last 2 months, and the Fed continues to raise rates, deep into the summer of next year. We have to be realistic here that these pressures will continue, and therefore we have to be prudent in the choice of instruments we use. If we get lucky and the labor market in the US begins to soften, inflation unexpectedly comes off, and the Fed pivots, then you will see the exact opposite phenomenon. Then capital flows may rush back to emerging markets, and we'll have the other problem where the rupee is strengthening. So a lot of this depends on global factors. Let me just emphasize this. We had the UK Prime Minister resign earlier today. I think the key in this very hostile global environment is hunker down and focus on macroeconomic stability. Now is not the time to be heroic. Now is the time to just ensure inflation is under control, the fiscal is brought under control, the current account deficit is kept under control. And once the storm passes, then we can kind of continue, refocus on growth prospects.
Well, Sajid Chinoy, thanks very much for that perspective. Sajid Chinoy there, member of the Prime Minister's Economic Advisory Council, on why the rupee is falling. It's a story we'll continue to track closely. For now, that's it. Good night.